Morning all. How we doing? Sorry I'm late. I'm always late on a Thursday. I have a spin class in the morning, so I never get here in time. I'm always a sweaty mess. So excuse the mess. How are you all doing? Morning Danny, morning Alex, morning Adrian, morning Tom, morning Steve. That's morning, it's time. I missed you for a while. Morning Virginia, Pips in the Forge, David, Neo, morning. Right, let's have a look at where we are. Morning Diamond. So let me just catch up on the news because I saw something just come in from Russia when I turned my machine on. Russia to redirect 140 million tons of oil and oil products meant for Europe to Asia. Okay. Russia to cut oil and gas condensate output. Russia. Okay, so it's basically oil-based news, that is. Let's have a look at oil. What's that done? Ooh, okay, right. So there was my gap fill yesterday on oil. For those that were here yesterday, that was the target yesterday from that trade that started up there. So that hit TP. I actually got out. I got out there. Or was it there? I've got the terminal open. I either got out there or there. I got out on the bounce. So when we bounced off of there, that's that one. That's the one I got out on, I think. So I didn't actually get to exactly target. I bottled out a little bit because I was worried about a triple bottom bounce without filling that gap. So because this was a propulsion gap here, so obviously it bounced 3 times off propulsion. So, but it hit target yesterday. So I entered a long yesterday. As we broke back above that high. And I have a second entry down here, which is at the top of this propulsion gap and this monthly support. So I'm in one there. Second entry is going to be there. Might take another one there. Let's have a quick look. Where are we? So that's my planned second entry there, which is ADR today. So I might leave it actually because distance between the two entries will be 44 on a 20. So that's 2 ADR. Should really take a second one there, shouldn't I? Let me just open my other terminal 1 sec. When you're ready. Oh, there we go. Oh, what? Update? Why? Ah, it's the wrong terminal. Sorry, bear with me. It's always like this on a Thursday. If it's your first time here, it's always like this on a Thursday morning. Sorry, I'll be with you in a second. Morning, Henricus. Morning, Baggy. Morning, Wacky. Morning, John. Morning, Doreska. Jeez, why is that open so big? All right, calm down. Oil. Right. So taking a second entry there. So my first entry was basically a 76.80. So that is 1 ADR. We're 1 ADR basically down from that initial entry that I took yesterday. So I'm going to take one there. That is a propulsion gap fill on that. However, I get the feeling we're going to come down to here. These, I think, are going to be left orphaned. If it gets all the way back down to there, that's a really deep pullback. That's almost a kind of rejection of that high, isn't it? So I don't really want us to push much further than 125 ADR from where we are here. If it does, I'd be slightly worried about this actually not being a push on oil, which I don't think it isn't, but I mean, we'll see. So I'm going to take a second there. Third is going to be planned down there. So looking for a retest of that high there. There we go. So that was the oil news. Let's just quickly catch up on any other news overnight. We had Meta shares come out. That was bullish. So looking at the shares that we had from yesterday's aftermarket, we had Meta, we had Roku. They're the two main ones there. Pre-market today, we've had Caterpillar, MasterCard. So big players, but these are more Dow-based. We've got Activision after. There's been a block. I don't know if you saw on the news yesterday, but there's been a block on Activision. Microsoft tried to purchase Activision and the Call of Duty franchise. But the Monopolies and Mergers Commission blocked it. So they weren't allowed to buy them. So we got Amazon, Gilead, Intel, Pinterest, Snap, loads of big players aftermarket today. So we should get some decent movement on the indices today as well. Let's just have a quick look what's happened overnight. NASDAQ and Dow. So NASDAQ, again, if you look at this, exactly the same thing. Remember I said exactly the same thing as happened the day before. Market buys into positive earnings. So they knew about Meta before market closed. They knew about Google before market closed. So all bullish. However, we're not making much distance on any of these because obviously this banking crisis we've got going on again. We've got another bank that's in trouble. So markets are actually struggling. As you can see, the Dow collapsed yesterday and the NASDAQ came down yesterday as well. So no real advantages on either of those. Afternoon, morning, Dureska. Morning, afternoon, evening, good night, all that stuff. Right, so that's all overnight news, I think. First Republic may face limit on federal borrowing. Saw that last night, and that was all the Governors of Canada stuff. That's good. So news today. We've got GDP this afternoon for the US dollar. That's coming out at 1:30 with unemployment claims. So unemployment claims will be the important one, and GDP. They're both big ones today for the US dollar. We've got pending home sales afterwards at 3 o'clock. That doesn't tend to do an awful lot. Then tomorrow, we've got the big one with the Bank of Japan. We've got the CPI figures for Germany coming out, and we've got CAD GDP and unemployment for the US as well, and PCE. So lots and lots of news coming over the next 2 days. This is the key one today, though, these two here, the US dollar at 1:30. So, right, so that's news all caught up. Let's quickly look at the DAX. DAX, we've got a gap fill opportunity. So there's your pre-market 15-minute range, very big tight range today. So that's just broken out to the upside if you're taking the pre-markets. We've got a bit of a gap fill opportunity to the downside. Propulsion target upside, which we've basically pushed up into. Let's have a quick look at the DAX and where we're potentially going today. So yesterday, we got down to that target I said yesterday. Remember, that was ADR and the monthly weekly support. We came straight down. There's beautiful opening range break yesterday on the DAX, straight down, straight to target. So that was nice and easy. Today, target still stands, same down there to the downside. Big propulsion gap. That's an old one. What's that painting there? Didn't update properly. So upside target, it's a bit difficult, isn't it, really? I mean, we've got that high, yesterday's high and the previous day's highs ADR. So New York sort of Globex session high there. New York high, really, as an interim target. But there's nothing really to look at particularly interesting today. So see where that goes. You're broken out to the downside. So if you took the pre-market upside, you've just stopped out on that one and gone short, looking for a gap fill. So that'd be a nice target hit to the downside. Right, let's watch that in a minute. Weekly ranges and monthly ranges. So the monthlies, we've got quite a few. We are right at the end of the month. We've only got 2 more days, today and tomorrow. So there's not much point in looking at the monthlies now. Weeklies, we're on Thursday. We've got weekly hits. So Aussie dollar, New Zealand dollar. There's no ADRs yet today. No news in Asia to drive the market so far. So Aussie dollar, New Zealand dollar. We've got the weekly hit on that one. Let me just scale out so we can see what we're doing. So from that high there on Monday all the way down. So potentially we got a long opportunity there. We had a lovely pause day on this one yesterday. Did a little bit drawdown control on that position, second position taken yesterday. So looking for a push back up into these propulsion gaps. I'm going to try something on, well, I'm going to try it on probably on my account, actually, on my main account, where I'm not going to use targets on the H1 M5 strategy. What I'm going to do is, instead of using a basket target, I'm going to use a propulsion gap target and set them manually. So I'm going to do a little experiment next month where I'm going to trade an account, trade the account, basically, exactly as I would with the EA, but without targeting. I want to see how much extra profit I can hold. Me, obviously, I've got to hold the profit back up to fill these propulsion gaps. It's a little bit of an experiment to do with the EA that I'm developing. So I'm going to see if I can incorporate it into the market reversal alerts EA and do it kind of semi-manually. But just to let you know. So that's nice weekly extension. We had a beautiful liquidity run on that low. And today, basically, if as long as we break the high of the day and the high of yesterday, we should be coming back up into those propulsion gaps. So profit take move on that there. Euro odd. That's just started to roll over. I've got an aggressive drawdown control position on this one at the moment, which is in profit currently, targeting there, targeting this propulsion gap. So not far away from profit on that. We got 1, 2, 3, 4, 5 EA trades on that, and I've taken a short. Lovely reversal alert on it yesterday. Loads of scale outs on this one. So this is the Monday low, pushed up. That's your 125% of the average weekly range. It's got exhausted, and now it's starting to come back down again. So that's a good short. The entry on that one was yesterday. Regardless of what time frame you took, it would have been M5 or M15. It's there basically, as you can see. You'll see it. Euro CAD extended to the upside as well on the hourly. So this is very much the same as the Euro odd. There's your Monday low, pushed up, reversal alert. That's retesting at the moment. So looking for all these propulsion gaps to the downside to get filled. We've got all these old ones here. That could take a week or so to get down to these ones, but hopefully we'll get down and fill these. 125 ADR is what we need downside today. If we get positive news on the US dollar, that will hopefully drive the CAD. Yeah, that will basically shoot down. So DAX is moving. Oh, blimey. Wow, that didn't look anywhere near. I've got my other chart open with, and it's all zoomed in. Didn't look, it looked really different. Okay, so there's your ORB on the DAX. Did anybody take the pre-market? What's caused that? Spanish retail sales? I don't think it's Spanish retail sales, do you? That's a hell of a hit, though. Look at that, 9.5% off of a 3.5 forecast. Well done, Spain. Don't know what you've been selling, but... okay, yeah, so DAX pre-market. Beautiful. So there's your 5-minute opening range break. I wasn't on the pre-market, annoyingly, today. I'm on the 5-minute, though, so I am short. Something's causing this to fall out of bed quite dramatically. there any bad earnings yesterday? Roku didn't do well, did it? There's nothing in the comms sector in the DAX, is there? Not quite sure why the DAX has fallen out of bed quite so hard today, but it has. So there you go. So that's target, that's the first target I said. Basically the same as yesterday, that weekly monthly low for a triple bottom bounce. So just watch this level. I'm 5-minute opening range break to the downside with a big old stop on it. So quite a low risk entry today. Target got a call, basically support, which is all the way back down to ADR. So hopefully we just get a drop out to ADR today. So that would be nice. Blimey. There you go. Someone woke up the DAX. So EuroCAD, So there's a good opportunity for shorts if you want to jump in on that one. You've just had a reverse alert this morning as well there on M5, which is playing out very nicely. So that's a good looking short opportunity. And you've got the pound odd as well. So that's extended too from Monday. There's your low, 100 ADR, got to ADR, nice big shooting star, reverse alert, and that's coming down nicely as well. So all those weeklies starting to play out, nothing on the average daily ranges at the moment at all. All of those RSIs yesterday have all kind of played out now. By the way, I have switched back to 21 RSI now. So I'm now running the 21 RSI on the hourly, not the 14. So we're entering into a lot of volatility at the moment. And the fact we've got these banks, another bank basically starting to wobble, I want to go into a slightly more risk-averse mode. So I've gone back up to the 21 RSI, just to let you know. You don't have to. It's up to you what you do, but I'm going back up to the 21. I've adjusted the EA as well to trade 21 RSI. Just because I think the volatility is going to start to come back potentially. So we are still very low on the ADRs though, as you can see. Pound New Zealand is always my gauge. We're still only at 150 on that. Everything else is really low. We're really tight ADRs still, but the volatility that we've had this week and these squeezes that we've had this week are indicative of maybe the market starting to wake up. So don't forget, when you're measuring anything by ADR, we're using the last 10 days. The last 5 days of movement have been a lot more volatile than we've had for the last month or so. So what I don't want to do is wait until ADRs are back up to like 300s or something, because by then you've had a lot of movement and you're in a lot of positions a lot tighter than you should be. So so move back up to the 21 on the RSIs. What am I doing? So basically there's nothing extended at all there at the moment. So yesterday, as you can see, 12.18% loss yesterday. Now that was not all the EA. A lot of that was me trying to do aggressive drawdown control on these trades. So there's what 1800. Need a calculator. Calculator? Where are we? 1800 plus 834 plus 633 plus 698 plus 835 4 equals 54. So $5,400 of that 12K loss yesterday was me. So you can take basically 5.5% off of that. Oh no, I've done it wrong. 5.4. Sorry, I can't use a calculator. 179 minus 5,400 is 6.7. So it's basically a 6.7% loss yesterday. Normal loss. Me being an idiot, doing aggressive drawdown control, lost another 5% on top of that. So I cocked up on 2 of them. I didn't put stops on them. I completely forgot. Because I'm not monitoring it properly, because this is the EA account that's running on the VPS. I wasn't actually monitoring it. So that loss yesterday isn't actually as bad as it looks, or it should be, but it is. I mean, it was done by me. So so basically wipe the month out at the moment on that. So end of the day, if I get a scratch month on the account, get a scratch month on the account, better than loss. So hopefully we'll get some of this all starting to pull back yesterday. Some of those ones that I took yesterday, I mean, you can see some of these. That was an aggressive position there. Look, that shouldn't have been anywhere near that big. The stop on that. It should have been a tight stop, and I completely forgot to put a stop on. So just took probably 3.5% more than I should have done. That's what happens when you have humans in charge of stuff, isn't it? So everything else is looking okay at the moment. There's nothing particularly squeezing hard apart from this pound CAD, which I've got an aggressive position on. Oh my God, I've done it again. Look, see, there you go. That would have stopped out. So there's 0.6% stop on that one. So I'll make sure I've got them on the rest of these. Oh my God, I haven't put stop losses on any of these. Bear with me a second. I know exactly why I did this as well. I had to rush out of the house yesterday, and just as I put these on, I had to go. These would have all been losses as well. So it would have actually taken a little bit more loss yesterday. So that must have gone into a bit of drawdown this morning. Let me just put it on this one as well, EuroCAD. So when I'm doing aggressive drawdown controls, somewhere between 0.5% to 1% is basically all I do. Well, normally. So that wouldn't have stopped out. So that entry was taken there, as you can see. So we would have pushed up. It's actually not a bad idea not to have stops on overnight, because you will get stopped out on those swaps. So I would normally do that. I meant to build an EA, actually. What I was going to do was build an EA. I've had this on my mind to do for a while, actually, where it basically removes stops half an hour before the swap and puts them back 1 hour after the swap. Basically, just so you don't get swapped out on the overnights, stopped out on the overnights, because they happen regularly, as we know. So, okay. I forgot to put a stop loss. Have you ever made your first million through trading without YouTube? No, I haven't made any millions through YouTube or anyway, no. Morning, Gable. Morning, Ratib. You're honest, silent, FX. Do you think I've made a million out of YouTube? Have you seen how many subscribers I've got? 8,500. I haven't even made 1,000 out of YouTube, mate. No, haven't made a million. You've been in here before, haven't you? You know, I tell it like it is, yeah? No one makes a million. The people on YouTube who drive Lamborghinis are all selling you courses. That's how they make their money. Greg Secker isn't a millionaire by trading. He's a millionaire because he sells a lot of courses. He sells an education business that turns over £20 million a year. That ain't trading. Just saying. You've been here before, so you know. Right, so going back to RSIs. So yeah, weeklies we've looked at. 4 hours. So we've got a few there. Aussie dollar Swiss, that is still, was still extended. Nice bounce starting at the moment. So we had this nice reverse alert going on the hourly. We are starting to push back up into propulsion. That one's done, basically. This one is 3/4 done, but we've got all these targets to the upside. This is a week's worth of movement, basically. So this is almost back to break even, this position. So somewhere around 150 ADR, previous day's high will be an exit on that one. So 4 hour, that one was extended and embedded below down to the 12 level. So huge move. Big profit take expected. Would look to somewhere to come back up to there, roundabout somewhere up there. So this is that previous week's low 2 weeks ago. So if we're going to keep market structure short, let me just put that like that. So if we're going to keep market structure short and we're going to respect the 24.72 zone, we could well pull all the way back up into there. But if we're going to have a tight, shallow pullback, we'd be looking at something along those lines. So that would be target on the Aussie dollar Swiss. You've missed the entry, obviously. The entry would have been M15 yesterday, or hourly, or M5 yesterday was an entry as well. Back down there. Pretty much where I got into that position there. So same entry as I got yesterday, basically. Aussie dollar yen, 4-hour RSI extension. Again, that one's already playing out. Oh, it's already gone. It's done. So that is extended on the 4-hour. Already out of that one, look. So there's the trade. First entry was on Tuesday. Second entry was yesterday. Exit this morning. That's done. Missed that one. No Lambo boys subscribing here. I know. Sad, isn't it? Morning, Stuart. Morning, Steve. Fidelcrest changed some rules. Yes. What leverage do I use? 500. Yeah, so Fidelcrest changed some rules. I've updated the website. The rules they've changed in the blog post. The rules they've changed have been in place for ages. I don't really know what they think they're playing at, but the only rule really that has changed is that, right? So we've now got 60 days instead of 30 as the minimum days. But to compensate for giving you extra time on the micro trader, they've increased the profit target from 5% to 10%. So yeah, they've given you double the days, but they didn't mention that one, did they? Yeah, target was 5%. What they've actually done is double the target. So they gave us all the rules which are really good, and they left out all the rules which are really bad, which is, oh, by the way, you've got to do twice as much to get past now. Thanks, Fidelcrest. Yeah, not as good as it looks. You can copy trade now as well, which is great, but you can't use EAs. The only way to copy trade is to use an EA. So don't read too much into those Fidelcrest rules. They're not what they seem. They've increased the account sizes on the Fidelcrest as well. So the 10K has moved up to a 15, the 25 has moved to a 30, the 50 has moved to a 60. So from a value for money basis, that's pretty good. 60K account at $330 is pretty good. You can't use EAs though, so you've got to manually trade it. You could, I mean, the thing is that, you know, you could use any EA you like, and they allow copy trading. So they need to clarify this rule on EAs, because you can't copy trade without an EA, obviously. So I'm not quite sure how they're going to allow you to copy trade. There must be some other way of doing it. I don't know. But the 30K account is also damn good value for money at the moment. So financially, they're pretty good. They also do 2-for-1 offers quite regularly, Fidelcrest, which is why I used them. And I got through phase 1 evaluation. It was great. Phase 2, I failed, but it's cheap. But you can't use EAs. If they have a rule where you're allowed to use EAs, that's great. There's the other rules they said they changed were weekend holds, and you don't have to use a stop loss. Well, that's always been the case. I traded with Fidelcrest sort of 6 weeks ago. I had weekends holds, news trading, and there wasn't a stop loss required back then. They're not changes to the rules. So that email that went out in that blog post was a bit of smoke and mirrors, really, as far as I'm concerned. 60 days, yeah, that's great. But they're one of the prop firms that give you a 0-day target. So you're always going to over leverage when you can pass it the same day anyway. So, yeah, swings for roundabouts. But they're still pretty good, Fidelcrest. So I still like them. Tom is coolish. I'm surprised you haven't hit 7 figures trading. Why don't you just use larger accounts? If you've got a couple of $100,000 I can borrow, Tom. If you're trading very large capital, I feel like doing huge numbers wouldn't be hard. Yeah, but I haven't got large capital, Tom. I have a wife, 2 kids, and a mortgage. So unless you're going to give me $500,000, if you give me $500,000, I'll do big numbers. But if you're not going to give me $500,000, I can't, can I? Morning, Guna. Started with my Forex funds for my first 100K account. Thoughts? Good luck. Well, I'm not quite sure thoughts. What thoughts you want me to give, Henry? But yeah, good luck. If it's your first one, you're probably going to blow it. If it's your first one and you've gone with 100K, or is it your first 100K? If it's your first account, I wouldn't go with 100K. I'd get used to trading prop first, because you're going to blow it. But if it's not your first account and it's your first 100K account, then go for it. Yeah, so Tom, I would love to trade large money the way I trade, but I haven't got large money because I need to pay a mortgage with my money every month. So I have to use it. I can't compound it, unfortunately. Euro yen, we'll have a look at that one in a sec. There you go. DAX came off of that low. Jesus, look at that. Stopped out on the DAX. Uh, 25-point loss. Look at that. Absolute collapse. Something happened which caused that in the DAX. I'm not quite sure what that was, but something happened to cause that. Don't know if it's a sector sell-off or something, but anyway. So we're getting in again on the next 5-minute break, which is likely to be south, I'd imagine. Not a very difficult one to trade this morning. Aussie dollar yen. So yeah, Aussie dollar yen extended already out of that one, as I've already covered. Let me quickly cover this one. You want to look at euro yen. That's not on the list. And pound New Zealand isn't on the list. Let's cover those then. Euro yen. So euro yen at the moment, absolutely nowhere. So we're in an expanding wedge pattern at the minute. So could go anywhere. It's just in the middle of RSI. No idea. Stuck in the middle. So you are basically, you're an outside bar on the previous day, which is basically indecision. And yesterday you put an inside bar. So basically, if you look at the daily chart, you've got a candle, you've got an outside bar followed by an inside bar. So that is no idea where we're going. So right now, pick a direction, flip a coin. Got exactly the same chance of getting it right. I would go south though, because there's more targets to the downside. And we had that yen strength come through. So if we are going to get a run on the banks, and if this banking problem is going to cause an issue, we will see strength coming into the yen, the Swiss franc as well. Now, the difficulty with the euro yen, if we get a run on the safe havens like the yen and the Swissy powers the euro as well. So what you're doing is actually you're driving money into the euro and you're driving money into the yen at the same time, which is why you don't tend to get the huge movements on the euro yen. Everything else against the yen will tank dramatically, whereas the euro yen will probably get run over by the yen, but not by quite so much. So I'd be more short on it at the moment, but right now it's absolutely nowhere. Pound New Zealand, short on that at the moment. That was off of an RSI extension on the hourly back here. Obviously now I'm using the 21, but when that was a 14 RSI extension, it's not a 21 RSI extension. So yeah, I've got shorts on this one at the minute. Propulsion gap targets to the downside, big ones, and that one there as well. So your entry would have been yesterday on pound New Zealand, and the 4 hour, I think we had an extension yesterday as well. Yeah, so 4 hour right now as well, but it's a beautiful uptrend this. So I wouldn't get too excited. I'd be looking for a pullback, somewhere above the 24, looking for the 24 to potentially act as support again on this one. So there you go. There's those two. Swiss is next. I've no idea, Virginia, why the DAX is whipsawing. No, something's caused that. That is the this is the opening cash balance, though. Remember, this first 5-10 minutes or so is the opening range, so it's just sheer amount of stock movement going in. Quite why, I don't know. The thing with earnings fortnight is obviously when you get a lot of sector movement, you get a lot of earnings movement. What you tend to find is the market gets bought and sold in sectors. So if there's a sector performing well, like tech at the moment, they will buy tech sector everywhere. So if there's stocks in the tech sector within other indices, they will also rally or drop. So something's had, I would suspect, negative earnings, which is dragging a sector down. We have a look at the DAX. We'll be able to tell. Deutsche Börse. Who are they? Deutsche Börse posts stronger than expected Q1 profits, and the price of the stock collapses. Interesting. You don't know what's going on with that. I've got a feeling this might be based on the banking sector thing again. Just be careful today, because you know what happens when we get these issues with the banking sector. Things go crazy. So just be a little careful. I mean, as careful as you can be. You can't be careful, can you? But just trading the markets. The markets move like crazy whenever they want to. But just be a little careful with trying to pick any directional biases, because if it looks like it's long and we get some banking news, it's just going to collapse. So I think the market is getting jittery again. We looked at this yesterday, didn't we? I said yesterday afternoon, when the fear and greed index comes out, I'm pretty sure we're not going to be sitting in greed anymore. We went straight back to neutral. We were sitting in 68 day before, almost getting ready for extreme greed. And then obviously we jumped straight back here. As we start to push back down into fear, we start to see the yen, the Swiss franc, potentially the US dollar powering up and everything else collapsing. So just be careful. This is all driven by the banks. If the banking sector starts to wobble again, we're going to have all sorts of trouble. Dances with Wolves. Hello, my favourite Englishman. Hello, my favourite person that dances with wolves. Quick question. So what's special about pound yen that people only trade it along with gold? Don't know. I don't know. I don't understand people that trade one instrument. I like opportunity. I don't like sitting there waiting. People that trade single instruments tend to be scalpers. People like Roger Banks, yeah? He trades a lot of pound yen, doesn't he? I think he pretty much trades pound yen exclusively, pretty much. But he scalps. He's in and out within minutes with, well, on his accounts with large profits. He does a lot of news trading as well, doesn't he, on it? But that's if you're scalping, there's nothing wrong with becoming a specialist in an instrument. A lot of people scalp, and I've got friends that only scalp the S&P. That's all they do, is they trade the S&P intraday on futures and CFDs, and that's all they do. They don't trade anything else. But if you're going to trade longer term moves, i.e. hourly charts and above, then you can't pick one instrument, because you could be sitting there waiting for it. Let's say, for example, we use the 4-hour RSI extension above the 70 level. We've only had 2 trades since March. So if we were just trading the CAD Swiss, we'd be sitting there for pretty much April for a month, not trading, would we? You can't do it. So different type of trading. AZ, it seems making 10% using position trading a month is reasonable. On a 10K account, 10% compounded monthly is like 100K by the end of 1 year. Am I off on something, or is that actually realistic? 10% on a 10K account is $1,000 profit, yeah? 10% on a 10K account is $1,000 profit. So it'd be $12,000 a month, not $100,000 a year. Sorry, a year. I don't know where you get your figures from. I don't know how you make $100,000. David, so if I didn't catch it, could you review New Zealand dollar CAD and Euro Swiss? I can. We're not going to cover those. So yeah, I'll do those in a sec. Deutsche Börse is own or run the Frankfurt Stock Exchange. Yeah. So they're crashing themselves. Morning, KB. Right, let's quickly cover these two. So let me just whiz through these quickly, and then I'll cover the other pairs you want to have a look at. So CAD Swiss, huge extension we know about. Obviously, Swiss franc has been on a crazy run. Have an aggressive position on this one, looking for push back up into potentially that support or that level. So we've got this monthly low here, which is the purple line. We've got the previous week's low, which is there. So that area there is, I would say, a decent area. We were going to find continuation short once we get back there. So nicely extended, obviously huge extension. So looking back at last time we did this, yeah, that's the profit take. So push, profit take, next leg, push, profit take, next leg. This hopefully is the profit take, but we'll wait and see. Very nice rejection. If you look at the hourly on this yesterday, remember I said yesterday, look at the size of all these candlesticks. Yeah. And then we suddenly got to this like big candlestick. And then we had a big push, a much bigger push and reversal back the other way. So this to me looks like the last flurry and the buyers taking control. So as long as we don't invalidate this level with ADR low today, I think there's a good chance this is the peak formation low that's gone in there. So CAD Swiss looks like a lovely long opportunity. 4-hour RSI extension. Look at the embedding on this. I mean, this situation we've just had with this Swiss franc is abnormal. This is not the norm. 3 days solid ADRs just doesn't happen. It's such a rare thing for it to do that. And it's so orderly. There literally was no buyers in the market at all. Oil prices collapsed. Swiss franc rallied on the banking crisis. This was the absolute perfect storm. So just one of those things, unfortunately, and you have to ride it. CAD Yen, 4-hour RSI extension. Again, got out of the shorts this week on that, flipped long. So that one at the moment looking good. Nicely extended and embedded down here below the 30 and 20. Again, big, strong movement there. The yen obviously pushed this one down. We had the weak Canadian dollar. So lovely wicks to the downside on this and a huge liquidity run down below that previous day's low. So yeah, lovely. Straight into weekly low and bounced. So hopefully that is peak formation low on that one as well. CAD yen. Euro odd. That one's rolling over very nicely as well. Again, same sort of thing. Swiss franc, big move. Australian dollar, negative news, perfect storm. Both of these had news positive in one direction, negative in the other at the same time. That's what causes squeezes. Massive extension over the RSI. So looking for a profit take move on this one, back down into this high there. We've got this little accumulation there, which could also act as a support level. So if you look at this on the hourly, this accumulation here. Yeah. So we're either going to come back down and retest this area, or we're going to bounce out of there. One of those two. So I've got a TP here. This propulsion gap in here is the obvious one to target, which is 125 ADR. It could obviously come all the way back down. It depends what happens with the euro. Basically, we got the euro news next week with the interest rates, so that is going to be the key. Please select the thing I'm trying to select. So potential for that one. 4-hour RSI extension, obviously ready to get into. Drop down M15. Yesterday was your reversal alert. M5 was pretty much the same yesterday as well. You've had one this morning on that as well. So that's euro odd. Euro CAD, same thing. Huge extension. Canadian dollar dropped. Euro and Swissy pumped. Same thing. Perfect storm. Huge embedded move on the RSI. Miles away from the 24. So looking for a profit take move on this again. So some kind of pullback that's the monthly high, the previous monthly high for March. That would become a flag break, which would mean more weakness in the Canadian dollar. So we really need to concentrate on this US strength and see what happens with the oil prices. But again, if the banking sector has a wobble, euro is going to be pushed along with the Swiss francs. So we are miles away. So I'll be looking for that kind of movement back into the 24 from here. So potentially back down into this high would be ideal, and that would be sort of a 24.72 bounce, similar to, you know, times we always bounce off the 24.72 on a trend. So looks good. For a mean reversion, play back down into the 24.72, nicely extended, above the 80 level still on that, or just coming under it now. Pound odd, nice extension on this one, same sort of thing. So the pound odd and the euro odd, if you look at them, very, very similar moves on these two. Couple of shorts on that one at the moment. It's just starting to roll over. RSI extension. So you had your 15-minute reverse alert on that one yesterday. 5-minute was pretty much in the same spot. You had another one on that one yesterday as well, just before market close. So that's come down very nicely. And pound CAD, again, extended to the upside. Got 1, 2, 3, 4, 5 positions on with the EA on this and an aggressive. This may well get stopped out, this pound CAD. So again, huge push, Canadian dollar weakness, looking for a pullback into the 24.72 zone at some point, nicely extended and embedded. Huge divergence on this. It's not actually that great, but I mean, the angle is obviously good, but this is kind of slightly pushing up as well. So yeah, very good extension on that one. Drop down, lower time frame, reversal alert. That's where I got my position on the aggressive one. So I'll stop out on a break above there. It's roughly 0.7%, I think. 0.6, 0.7, 6.5. Pound CAD and US dollar CAD. So US dollar CAD. This is a tricky one. With the US dollar news this afternoon, if we get a rally off the US dollar news, we're going to be pushing up into these propulsion gaps. It's difficult to know how far this can go because we don't know how weak this Canadian dollar is going to be moving forward. So all we've had is the push, flag, push. This could be a second flag for another push. So we'll see what happens with the news this afternoon. But this oil is going to play a big part, I think, in this as well. And I get the feeling we might get another leg down on oil. But we'll see. After what's happened this morning with Russia, it may be a case that changes the dynamic and therefore the oil pricing with Asia. So if Russia is now going to scrap everything to Europe, which is pretty much what's happened anyway, because Europe said we're not having it anymore, they have found a buyer in Asia. So that restricts demand from the Asian area for everywhere else in the world, which could well have a big impact on oil pricing. So we might find that the analysts start to adjust their pricing on oil, and we may find that oil kind of finds an equilibrium. If that's the case, it will weaken the Canadian dollar because it's its main export. So we might find that we start to go into maybe a wide range on oil, or this kind of movement where we don't make huge amounts of progress, rather than what we're expecting, which is a push up to 95 plus a barrel. So I'm not 100% convinced on this oil after what has happened this morning. I was very convinced yesterday at the gap fill. That's where I was expecting the bounce, and that's where we got the bounce. What I was expecting was the bounce to hold. Then we had this new news come in. So, yeah, difficult one to call that one. But the US dollar CAD obviously is going to be driven mainly by the news on the US dollar this afternoon, which is 130, which is the GDP and unemployment. So if we get negatives across the board on that, that will bring that down very, very nicely. And then they can come back down, fill all these little gaps in, and that will give them another leg up. But if oil continues to drop today, that will weaken the CAD. So we might not get much movement down, even if we get negative news. If we get positive news, highly likely that's going to go up and do another leg. But we'll wait and see. Two pairs. New Zealand dollar CAD. So New Zealand dollar CAD. There's one short on this from the RSI extension on the hourly. There. Somewhere. You've got shorts on these, short on both, yeah. So propulsion gap targets to the upside. So depends how many positions you're in. When I see this, I kind of class that as probably mostly done. So this is where I would really set the target, although that has been very deeply tested twice as well. So that may be your target short now. So up into there or up into there and then push down into there. Canadian dollar, again, it's weak at the moment. The New Zealand dollar is very weak at the moment, but the Canadian dollar is also very weak at the moment. So looking at these highs, there's a potential for it to bounce back off of that, isn't there? But difficult to call that one. At the moment, it's not extended on the hourly. It's not extended on the 4 hourly. We've had the extensions, which is why there's a short on this at the moment, which was there. So since then, it's just had a little push down, push back up again. So we've gone literally nowhere in 3 days. So difficult to call. But if you look at it on the higher time frame, it's a short at the moment. So yeah, like it short, like it where it is as a short. I don't think there's a problem with that one at the minute. Euro Swiss. So Euro Swiss out of the longs on that one this morning. So out flat now on Euro Swiss. Those 3 positions. Is it 3? 1, 2, 3. Yeah, so 3 positions out flat at the 24. So Euro Swiss, obviously, the ADR on this is only 39. So it's a really small ADR pair, this one. So I wouldn't, this is always a tricky one because, especially at the moment, we've got a lot of potential worries with the banks. And the problem with the Euro Swiss is obviously the Swiss franc is one of the safe havens we tend to stick money into when there's problems. And that drives the euro with it. So when you get a strong move on the Swiss franc, you tend to get the euro power up alongside it. So you're trading something that is being powered up by something else. So this is why you've got a low ADR of 39 pips on it, because they move a lot in tandem. When you see something like euro yen and Swiss yen, you'll find the charts on the euro yen and the Swiss yen look very, very, very similar because it's kind of the same thing in the same zone doing the same thing. So at the moment, this one is extended to the upside. So it's a good looking potential short opportunity down into these propulsion gaps. However, you've got these upside targets. That one I'd say is pretty much done. That one there and that one there. So we're up in this propulsion gap target now. 125 to 100 ADR, I would say, is probably where you will start to then get a profit take move back down into this area here. It is a short though at the moment, but it flips. As you can see, it flips around a lot. We're bang in the middle of this monthly range as well. So difficult to call the euro. Next week we've got the rates for the euro on Thursday. 3.5 is where we are with forecasting 3.75. Potentially we are going to get a 4, however. So when the refinancing rate comes out next week, that will either pump or dump the euro. Now, the euro's been powering up this week a lot, and I think the market is factoring in a slightly higher rate expectation than 3.75. If that happens and we get the 3.75, I think we might see a drop in the euro. If we get the 4, I think we'll probably see an incline. So we'll wait and see, but that's what's going to impact it next week. So this drive that we've had on the euro this week, if you look at all the euro pairs, they've all had a very, very nice week this week. And this is the market buying into the interest rate announcement next week. But what happens with that interest rate obviously is going to impact what happens with the euro moving forward. So we'll probably find we go a little bit flat from here, or we just reverse the most of the trades that we've put in this week. So that is good for shorts. Still nicely extended, more to the upside than the downside. So I'll be looking more to short it than long it. They look good. Easy, like 10% compounded monthly for a year. 10K, 10% monthly compounded for 12 months is 28,500 at the end of the year. I was using compound interest calculator. It was something like 97K. Yeah, if you want to try compounding, compounding doesn't work though. I mean, you won't compound. You won't compound because, like, so first of all, that's no problem. If you're going to compound, you can compound, but you're never going to take a salary. So basically, if you can live on fresh air for a year, that's fine. So if it's an account you want to grow as an investment or a pension fund or something, then yeah, that's certainly possible to do. You can compound it, obviously. The problem with compounding is it also compounds your losses. So let's say, for example, you start off with a 10K account and you grow it to 15K. Yeah. And then you have 2 bad months in a row. Your 2 bad months are going to be 10% losses, for example, on 15K. That drops you down faster, which means then it takes you longer to get back to where you were. Everybody that uses compounding calculators puts compounding in as in they are going to make a profit every month. You're not going to make a profit every month. 2 to 3 months of the year, you're going to make a loss. Yeah. And you need to compound those losses. So go into your compound calculator, right? And put in that 3 months of the year, you're going to make a loss of 5% and see what difference that makes to your end of year result. Yeah. People, you know, all these compound calculators show you what you can make if the perfect conditions arise. There is no perfect condition in trading. Yeah. Do you think this is perfect? Do you think yesterday was a perfect result? No, it's awful. This is real life. This is what happens. The market goes crazy schizo and is going to hurt you. Whether you use a stop loss or you don't use a stop loss, you're going to get months where you're going to get hurt bad. And they have to go into the equation. I lose a couple of months a year. This happens. I can't not lose because the market will always want to take my money away from me. That's its purpose. It moves up and down, hunting liquidity. It moves up and down, short squeezing people. Yeah. If you're not using a stop loss, you are part of a short squeeze. Look at the Swiss at the moment. Look at the CAD Swiss. They are squeezing the longs. I am a long at the moment. I'm part of a long squeeze. These long squeezes, if they continue, will hurt, and you will have to take losses and realize those losses. Your compounding calculators don't equate for that, do they? There's one on my website. Which basically does a load of calculations for you. Blimey. Yeah. So if you put in your starting balance of 10,000, for example, and this is using a stop loss, right? And you're going to risk 1% of your balance, right? Your risk is going to be $100 per trade. If you take 30 trades a month with a 2-to-1 risk reward ratio and a strike rate of 60%, the best case scenario you will have is you're going to make 2,500, right? But you're not going to get a 60% strike rate every month, and you're not going to get a 2-to-1 R on every trade. That is just not the way the world works. If you're aiming for a 2-to-1 R, as we know, and I've shown many times in here, that is going to be way beyond the average daily range of a pair. And if you don't get a multiple day push of ADR, you're never going to get it. It's not going to get hit. So most of the time, you'll probably be looking at achieving somewhere between a 40 to a 45% strike rate. So average it out that you're probably going to make somewhere between 900 to 1,800 a month or potentially lose something like 140 or make 640. Real world, this is. That's probably more like what's going to happen. But you're going to have months like this where you're going to lose 750, you're going to lose 1320. There won't be many of them, as long as your strategy is good. Regardless of whether you're position trading, you're losing a stop, using a stop loss, you're scalping, you're swinging, whatever you're doing, the market is going to take away a large portion of your profits on a couple of months a year, because it will just not be the right conditions for whatever strategies you're trading. This tab, the trade outcome tab, shows you basically what your return would be depending on what your wins and losses are. And, you know, if you start off with a risk reward of 2, for example, and you're risking 1% on a trade, and you start off with a $10,000 account, look at what happens if you have a strike rate of 50%, yeah, and you take 30 trades, but your first 1, 2, 3, 4, 5, 6, 7 trades are losers, yeah. You only ever get to about 11K in profit, because you're not trading with $100 risk per trade anymore. You're now trading with a $93 risk per trade. Therefore, your reward is smaller and it takes longer to get there. Yeah. So your compounding calculators don't take into account the losing runs that you will get, the 5, 10 trades in a row, which will go against you in your 50% strike rate. If you've got 10% less in your account when you are starting your compounding account, to get that 10% back is going to take probably the next month. So you can take 2 months out of your compounding calculations and only base it on 10, because that's all you're really going to have to do, because you're going to have that and the losing months on top. Yeah. Try it. I have tried compounding accounts many times, and it all sounds beautiful and looks good on paper. In real world, it's virtually impossible. But yeah, it will. In theory, it can work. But don't forget, compounding is only good for investment accounts. It's not good for a live trading account, because you can't pay yourself. Yeah, I've got a 30K account, and I can get 10 to 15% out of it, but I can't compound it because I've got to pay the mortgage. And that's why I use prop, to prop up the income. If I can get 2 or 3K out of prop a month, which is what I generally tend to do, I've had much, much bigger months than that. They're flukes. That's what pays the holidays. Not flukes, but I mean, it's not the norm. That you could compound as well, but you're not going to be able to hold accounts long enough. So I would just be careful with all these. I've seen these compounding calculators, you know, and these courses. This, you know, people sell courses for. There's a guy out there, you probably know him. What's his name? Sean. Can't remember his name. Just bought a blue Porsche. Sean, someone. He sells a compounding course, which is about $1,000. Yeah. So don't forget, whatever your account's starting with, you've got to make that $1,000 back first before you can even start compounding. And he blows accounts regularly, and he admits it in the course that he blows accounts regularly. So be careful. It's the Lamborghini crowd. Tereska, please. Please what? He's talking about something I was saying. Henry, you're the expert, but wondered why you don't seem to use volume profile. Because you can't use a volume profile on CFDs. I use volume profile on futures, but you can't use volume profile on CFDs. You can probably answer the question as to why. DAX, what's going on with the DAX? Virginia. Jeez. Okay, I'm long. I've just shut my other terminal down. That's not the one that's trading the DAX anyway, so that didn't help me. Yeah, I'm long DAX now, and I will be pretty much break even on that. Are you asking for pound Swiss? I think I just covered pound. I covered pound Swiss, Doreska. Nick Sean, that's it. That's the guy. AZ. But to answer your question, Henry, there's no centralized volume in CFDs. So you can't trade a volume profile on MetaTrader because there's no centralized volume. All you're doing is you're seeing the volume of your broker. If you've got a broker which has only got 10 customers and does $10,000 in volume a day, volume profile is totally irrelevant. The only way you can use a volume profile is on the futures market because futures market is a centralized exchange. I'll do pound Swiss again. I don't mind. I'm pretty sure I did pound Swiss. So long on pound Swiss at the moment. Did I do pound Swiss? I'm not sure I did. So your RSI extension on the hourly was back. Well, actually, the initial extension was somewhere back here. We had that multi drop basically. So yeah, just looking basically for a continuation push back up into these propulsion gaps. This one here as well, that one there. That's a little bit tiny, that one. But yeah, looking for a push up. The pound is doing very well at the moment, but obviously not against the Swiss franc. Swiss franc is just on fire at the moment, has been for weeks. So it is getting down to the lows now, though. So 200 ADR from where we are today, or 100 ADR from where we were yesterday, is that monthly low. And as you can see, we are in a big kind of range at the moment. This previous monthly low is where we've kind of tapped out of. So I think there's a good chance we can push back up into that 24.72 for a new leg down if we are going to get another leg down. If we're not going to get another leg down, then obviously we'll be looking to push back up into these propulsion gaps up at the highs. So we've got some RSI alerts just come in on the 21s. Oh, we've had one, sorry. Euro Swiss. So yeah, where we are at the moment, we're kind of mid-range on the 4 hour, and we're mid-range-ish on the hourly. So I'm already in this with longs. I've been in it for a few weeks now. It's just not going anywhere at the minute. Euro Swiss is an hourly RSI extension, so that one's pushed up further. So that propulsion gap is now filled. This is the second propulsion target, which is 125. So that'd be a good short. So we're just above the hourly there. Sorry, above the 70 level on the hourly again. Beautiful divergence there. That is bearish. However, we've broken out that weekly high. The next weekly high is there, which is 150 ADR. So I'll be looking at that propulsion gap potentially, or there. If we can get a push, I'm not sure after yesterday. Look at the strength of yesterday's movement. I'm not sure it's going to have the legs to get up there, but it might do. So all these Swiss francs are starting to play out a little bit now. So Aussie dollar Swiss is pushing up nicely. US dollar Swiss pushing up nicely. So we got a weak Swiss franc. We are actually seeing some movement to the upside on this Swissy now. Swiss yen coming down. Morning, Michael. Anybody got any other pairs they want to have a look at? Could really do with the pounds dropping down. Could do with a really nice rally on the Canadian dollar today. Nice big push on the CAD. I want some positive US news to get a push on the CAD today. New Zealand dollar yen. ADR today would be nice for a short. This propulsion gap we've got up there, if you look at the Aussie dollar yen and the New Zealand dollar yen, they're very, very similar. they're both fairly weak at the moment. If you look at the fundamentals, the buyer scorecard for the yen pairs, they're all buys basically, the yens, bar the Aussie yen and the CAD yen, but that's really because retail sentiment is offside. So they're all basically buys. They have been for ages. As you can see with most of them, they've been driving up quite nicely. New Zealand dollar yen not so much, but that buyer scorecard I think is going to change. The COP bias on these I think will change soon, because I think we're going to find that the Japanese are going to increase their interest rates for the first time in a long time. So we haven't had an interest rate rise on the yen for about 3 years, I think it is. I think it's about 3 years. $2016. Oh, it's longer than that. So 2016, basically, we moved down to negative 0.1. So that's 7 years. Blimey, I don't think it was that long. So yeah, so seven years basically we've been sitting at negative interest rates. I think this is going to come up. I doubt very much whether they'll put it up by more than 0.1. They might do. You never know. But if they do start to increase their interest rates, I think we'll find some more strength coming through on the yen, and we'll get a continued push on the yen pair. It will become much more dominant. So I think we need to be a little careful with long biases on these. I'd be much more interested in short. I've been much more interested in shorting the yen for ages. However, it's been moving up and down. It's been very, very weak. But the intervention, when the intervention started back here, so that was the first yen intervention, which was around about August last year. Then they did the second intervention in October. That was the one where the market sat up and was like, yeah, right, okay. We got to 150 and they were like, nope, we're not having it. And then they intervened again. And they've had multiple interventions since. Since that happened and it became more dominant than the US dollar, we've had sustained periods of weakness in the yen, but overall, it's holding itself very, very nicely, and it has been for the last few months. And I think it's a precursor to probably money moving into it. So if you wanted to be super safe with it, I would just look for shorts on everything yen based. But I think, you can trade it either way. Look, there's a long there. No problem getting out of that one. There's a short there. Out of that one. Fine. So you can trade it in either direction, but I'm more slightly biased, especially with what they've been saying recently about potential interventions. I think it's on the cards for a bit of yen strength coming through. David, it may be dumb, but knowing what interest rates are and how they affect all lines of credit, what does a negative interest rate do? Well, it makes you unattractive to investment, basically. Countries like Japan don't need high interest rates because they're an economic powerhouse for manufacturing and export. So and I'm not quite sure on the mechanics and what the negative interest rate actually does for them, but it means that your currency is never really in demand from an investment perspective. So interest rates higher interest rates encourage saving and investment. So when you put your interest rates up, your overnight rate, it encourages other countries to buy more of your currency, which strengthens your currency. We don't buy the yen unless there is a problem. So it's a safe place to put the money because it's stable. That's why it's always been a safe haven. They've always had very, very low or zero interest rates. It's just the way it's always been. They're the anomaly. But in doing so, they've really had a problem with COVID because everything shut down. They shut down, and we stopped exporting stuff. They stopped manufacturing stuff. We said we want more of your stuff. They couldn't manufacture it fast enough, so they had a massive economic problem, which devalued their currency even further. So they've really struggled to get out of COVID, which is why I think they're going to put the interest rates up slightly. But I'm not. We're used to having zero negative interest rates. We have done for a long, long time. So I'm not sure exactly what impact it will have, but I would say it would probably be much more bullish yen. The fact that they're intervening, it tells us that they mean business. They've got a problem and they are going to fix that problem. They always have done. The Japanese are notorious for intervening, and they basically buy up large swathes of their currency to pump it, which makes them attractive, which brings more money in. And then they basically balance out. But what they end up doing is just buying more of their currency and propping themselves up, and they get themselves into a mess. So, which is where they have been for the last couple of years. I don't know, is the honest answer. If it's not altering the interest rates, what the Japanese intervention they've performed recently. So they buy up their currency, basically. Bond purchases, they sell. So basically, they just encourage people to buy the yen, and they buy up the yen themselves. So it's like our central bank basically buying a load of pound. It's like the printing money thing in the US. We run out of money, print some more. You can only print so much, and then there's too much out there, and it all goes wrong. So it's a dangerous thing to do. DAX is coming back down to the opening range break to retest. I think I'm probably break even on this. I haven't got my terminal open. I should really, shouldn't I? 46. Yeah, I'm break even on that second trade. So about a 25 pip loss this morning on that first break to the downside, and then break even on the second. Not very good, the DAX. Very whippy, up and down. The pre-market, that was the one to be on today. I wasn't. Okay, here is one. Okay, here is one. Dances, you've just said, okay, here is one. Twice. I don't know what that means. Does it mean you don't owe them interest if you get a loan? It almost sounds like the government owes you if you get a loan. So basically, that is the base rate. So whenever you get a loan, the banks put typically their rate on top of the base rate. So the base rate is 0. So when I took my mortgage out, the base rate was 0 in the UK. So basically, the bank gave me 1.6% as a mortgage rate, which is fantastic. So I fixed it for 5 years. Now they're stuffed because they're paying 6.5% on my mortgage. But basically, yeah. So you don't. What they're saying is any money that you buy is going. Yeah, it's going to lose money if you stick it in there overnight. You will dwindle your balance. So what they're saying is we don't want you investing and saving money with us. We want you spending the yen. We want you to spend it. Go out there, spend it, because the more of it that's being spent, the more of it is out there, the better it's going to be for the economy. Which is why interest rates go up and down all the time. They're a tool for expanding and contracting growth, which is why we have high inflation. When inflation goes too high, they put interest rates up. Interest rates stop people saving, make people save money and stop spending it. Therefore, inflation comes down. And then they reverse it. But basically, interest rates are this is why it's important to keep a track of the these key fundamentals on the site. The higher this inflation is, the more pressure there is for them to increase the interest rate. When inflation change is coming down, it reduces the pressure on them doing that. So everybody's got a target of 2%. 2% inflation keeps your economy ticking over very nicely. You're gradually going to grow your economy. Your GDP will just keep going, and everything's happy. But it's virtually impossible to maintain inflation because people get greedy. Businesses put their prices up, which makes it things get more expensive. So we go, oh, it's fine, I've got more money, I'll just buy it anyway. And you keep buying it and buying it and buying it until all of a sudden you go, hang on a minute, this loaf of bread was 50p last month or last year. Now it's £1.50. What the hell's gone on? Well, inflation's at 10%. So everything's 10% bigger than it was last year. Right. Okay. Well, you need to stop spending money then. So they hike the interest rates. The problem with hiking interest rates is it makes everybody poorer because 90% of the population has a mortgage, and your interest rate is based on that. Your mortgage rate is based on that base interest rate. So the banks at the moment are charging somewhere between 6.5 to 7.5 for a mortgage. I pay 1.69%. Why? Because when I fixed my mortgage for 5 years, the interest rate was 0. So the banks were putting 1.69 on top of the 0 rate. Now they're putting 1.69 on top of the 4.25 rate and more. So I'm fine. But when I come out of my fixed mortgage rate, my mortgage is going to go from about $1,600 a month up to something like $2,500 to $3,000 a month. It's going to double because I'm used to paying that and I'm going to have to now pay that. So what do I have to do? Stop spending money on everything else, which drives inflation down. But because I can't afford to pay my mortgage now, I might lose my job, and it drives unemployment up. So they can't keep interest rates high for long because it drives unemployment through the roof and GDP down. When you're making less money, that discourages businesses from operating. They have to then cut costs. What's the biggest cost-cutting exercise a business can do? Sack staff, which drives up unemployment. So these four things are all very, very closely interlinked, and it's a huge balancing act that the central government and central banks have to play to keep inflation at around about 2%. And it's just impossible when you're coming out of COVID. And this is why we're seeing this at the moment, 10% inflation, because we were screwed. Nobody had any money. Everyone was unemployed. No one was doing business. The stock market was going through the roof. Businesses were making losses. Nothing added up. So the whole economy throughout the world is screwed. This is why it's such a dangerous place at the moment, and why we've got ADRs. New Zealand dollar Swiss, just say ADR. Why we've got ADRs where they are, yeah. So ADR on the pound New Zealand 3 years ago was 350 to 450. Yeah, on a regular basis. We're sitting at 150. So the market is contracted tight because it's a really dangerous thing at the minute. We don't know what's going on. We didn't have wars as well. We haven't had war in Europe for, 60 years, something? 70 years, is it? 75, 80? I don't know. When was World War II? 1939, 45. So, everything's in a mess, basically. All in a mess. So the Swiss franc is weakening at a rate of knots. So first ADR hit New Zealand dollar Swiss. I'd be very careful with these ADRs today. We've had, as we know, we've had a very strong push on the Swiss franc. So quite possibly a very strong unwinding coming as well. Euro Swiss just about hit ADR as well. There you go. So this is what I was saying earlier about potentially doing an experiment on my account. And the reason I'm going to do it on my account is because the EA is trading my account anyway, but I'm kind of manually intervening all the time anyway. So, but this trade here, yeah. So we closed out there because that was a quarter of, half an ADR, which is the target, which is it's told to get out half an ADR in pips as a basket. But the logical target to set would be there or there, wouldn't it? So by manually placing TPs at propulsion gaps, I think we could squeeze a lot more money out of a lot of these position trades. So if you look at the historical trades on some of these pairs, that one was not a bad exit. I'm just trying to find, there you go, look. So here, for example, so can't you see that, can you? So that trade there, yeah, was a long RSI extension. We took a long. The target on this one, the obvious target would have been there, wouldn't it? That propulsion gap that got filled and that propulsion gap there. Yeah. So when this trade was taken, there was a propulsion gap there and there. So we mucked about for a couple of days. We got out with half an ADR, which is fine, but that would have been a better target than that because the propulsion gap fills. This one here, we took a long there. When we took that long, there was still this propulsion gap here and this propulsion gap here. So this one exited there, whereas it could have got twice as much profit. Yeah. This short here, we've got one on, and then there's a second short there. So the average is there. So propulsion gap target, that one's probably done. But this is probably the best target for this trade here. But the EA will get me out somewhere around there, which is half an ADR, which is 75 pips. Yeah, there. So that's 75 pips. So that's where the EA is going to exit. You could squeeze a little bit more out by coming to that propulsion gap, but that one is an obvious target to the downside, isn't it? So I'm going to try basically, and as I say, try being the operative word, because when you put any human being involved in any kind of automated trading, there is emotion involved. But setting your targets at these propulsion gaps, I think, is probably going to squeeze quite a bit more profit out of them. It's going to mean that the trades are going to last a lot longer, potentially. But, you know, I've been noticing since I've rebuilt this indicator and made it color-coded, it's so much easier to see all these old propulsion gaps in here and how they get filled. You know, that target got filled. Yeah, all propulsion gaps, virtually all propulsion gaps get filled when you go back through time, don't they? You get the odd orphan. But when you get an orphan, you just move up to the next one. So if you get in there targeting that propulsion gap, it doesn't work. You scale in. If that propulsion gap wasn't a profit, fine, you'd scale in, and then you get out of that propulsion gap. You move your target from there up to there as you scale into your positions. So I'm going to try and do this manually because this is what I'm looking to build with the EA, the new version of the EA, which I'm going to try and build based on propulsion gap targets. But I kind of want to manually trade it to see firsthand and how it actually plays out. Because I can do back testing until the cows come home, obviously, but there are so many variables for moving targets through propulsion gaps and how far away from your break even should the target be, how big should the propulsion gap be. You know, the larger propulsion gaps quite often get orphaned if they're fundamental ones, so we need a way to filter that out. You know, there's all sorts of things. So I'm going to try and manually trade it next month and try basically and see. So this one here, for example, great short at the moment. Look at the size of that propulsion gap. That one there is kind of done. We've got a big one there. We've got this big one here. We've got these down here. Highly likely that is going to get hit. My target and exit is going to be somewhere around there. Yeah. Half of what I could actually get. Possibly 3 times more back down to here. But I've got to hold it for a week longer than I would normally hold. So don't know. So I want to try and trade it that way. Not that I've got anything wrong with automation, but obviously I used to manually trade this strategy, and I'm loving the automatic drawdown control. However, I'm thinking, you know, there was an exit. This is another good example. Look, there was an exit. There was a propulsion gap. There was another propulsion gap. That exit doesn't look like much, does it? But it's actually a 50% more profit than I would have got if I'd have just waited for the next propulsion gap. But that would have mean waiting another day. If I'd have waited another week and a bit, I'd have had not that much, but that much profit. This trade here was exited there. It was obvious it was going to do that propulsion gap, wasn't it? So I missed all of that profit. Yeah, it's only another hour and a half, but hour and a half is 50% more profit than I would have got just by targeting the propulsion gap. This indicator is just gold. Propulsion gaps are just the best thing since sliced bread. And since I've redeveloped this indicator, I've been eyeballing it much more. And, you see where this is going. Yeah. Much more likely to go up. So we've got a sell on at the moment. That's kind of filled, isn't it? So that, to me, is 3/4 filled. So there's not really a target to the downside, I think, is very viable below my entry. It's much more likely that this is going to go up. But when it goes up a certain amount, it's going to come back down and fill this propulsion gap here. So I need to get into positions that gives me enough profit to get out of that propulsion gap. So I want to try and use these more. And I think manual trading is the way to fine tune the strategy for the EA. Because at the moment, I've got too many variables, and I think I could be testing this for a month and still not get it right. I think I need to trade them basically and see how long it takes. How'd you get the lines of trades drawn on the chart? Entry and exit these. So this is all part of the indicator, the support resistance propulsion indicator. That is the trade history on chart. Okay, so that just turns on the trades. That just plots your previous trades for this exact purpose. Yeah. So whenever you're trading any strategy, what you need to be doing, and this is all in the bootcamp as well, you need to be analyzing your performance. And the best way to analyze your performance is to show your trades on the chart. So you took a trade there on an RSI extension, you got out there, looks like a great entry. Why didn't you wait for that propulsion target? Never mind. Why didn't you wait for that propulsion target? Why did you leave half of the profit on the table? Yeah. Until you see your trade on the chart and you see what happened after it, this is as important in your trading analysis than anything. What have you left on the table? Where did you think it was going to go? Propulsion fill. What did it do? Propulsion fill. So why did you get out there? Because the EA was told to get out there. And this is exactly why I'm going to try and do it a different way, because you can see all of this. Look, that's a beauty. Look, got in long, got out in that propulsion gap. Perfect. We've got this one at the top there to aim for as well. So that was a perfect exit. Half an ADR. We know half an ADR is achievable because 58% of the time the market stays within its average daily range, which is why we target it. Same there. Beautiful entry, beautiful exit. Straight into that propulsion gap. Missed all of that. But with this trade, again, it swings and roundabouts. So with this trade, if you hadn't got out there, you would have had to get into a second entry there, and then you would have got out there in that propulsion gap. So you're always going to have a second exit using the propulsion gaps. So that was a great exit. That was pretty good at exit. Next day I could have got more. There's a lovely short. Lovely exit. Collapsed. But if you look here, there's no reason for it to come down here because there's no propulsion gaps to fill. So this is just basically driving down. That was a good exit. You couldn't have foreseen that because there was no propulsion gap targets for you to aim for down there. Long. Propulsion target. Exit. Perfect. Short. Propulsion target. Exit. Perfect. Yeah. It's just the way it works, isn't it? The market just heads from propulsion to propulsion. Where we are right now, this is questionable as to whether that is filled. But there's way more upside targets, isn't there? So this is what I'm looking at this now going, actually, this is more of a long than a short. There's much more reason for them to come up here than there is for them to go down there. So when I get in, I might want to get out faster because I think, actually, we're probably coming up here and I'm wrong. So I might want to get out quicker. All sorts of ways you can use these, but I want to manually trade them for a little bit, just to see if I can shoehorn more profit out of the positions. The other thing I've thought of doing as well, we know propulsion gaps act as resistance all the time. Yeah, so there's 3 perfect examples of propulsion gap resistance on the chart right now here. So what we could also do is use them as a break-even point. Now, we know break-even trades get broken even most of the time. However, if the propulsion gap is far enough away and we've got a bigger target to the upside, that might be a way to use them to squeeze more profit as well. So I just want to I want to do a lot more manual trading with these, just to see if I can squeeze cash. So that's my my May project. Very nice. Bought the MT4 version, but sadly can't use it. Need to wait for the MT5 version. Why can't you use it? Happy to buy all of your indicators and EAs. Thank you for these extremely valuable sessions. Cool. It's a nice little sideline, the indicators, I have to say. Can't pay the mortgage with it, though. Mind you, it helps on months like this. Why can't you use the MT4 version then? All trading accounts on MT5. Ah, right, okay. You know you could always switch to MT4, though. Or what a lot of people do is use the MT4 version for analysis, and you trade on MT5. So you can certainly do that. A lot of people have said to me, because I don't code for TradingView, why are your indicators not on TradingView? Because I don't use TradingView. Well, I want to use it on TradingView. Well, why don't you do your analysis on MT4 and take your trades on TradingView? Doesn't matter what you analyze on, does it? The dashboards, right? So all these dashboards do is they alert you to RSI extended conditions and ADR extended conditions. You can trade on anything you like. These are just telling you that New Zealand dollar Swiss right now is extended. Brilliant. Let's have a look at it. What do I want to do? Well, I'm going to drop down to M5 and wait for a reverse alert, and I'm going to get in short. So as soon as I get that reversal alert, I'm going to go over to TradingView and hit the sell button. Doesn't matter. But it's up to you, People don't think about it, though. I had a guy contact me the other day. He's like, quite a few people have contacted me saying, when are you getting the MT5 version of this out? It's like, when it's done, when it's ready, when it's tested, when it's bug fixed. You can use the MT4 version today because it is just an indicator. So regardless of what platform you trade on, I've used the futures platform and volume profile to take trades on CFDs. So because I've got no centralized volume on CFDs, I can use volume profile on the futures market to do my analysis, take my trades on my funded accounts, which I do because I can see the volume profile and I can see the orders. Very handy for trading CFDs, but you can't do that analysis on MT4 or MT5 because you don't have that centralized exchange, do you? The DAX is not too interested in the gap fill. DAX hasn't got a gap fill. Oh, what you mean the gap fill to the downside? Yeah, so the gap fill, we've still got this gap to the downside on the DAX here. It's just sideways, but this is exactly what oil did, Tony. Yeah, so oil gapped here, and literally for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, it was disinterested in doing the gap fill. Boom. Then we did it in a week, and we're still down here now, below the gap fill. So look at the DAX. There's our gap fill. We pushed away, started going to an accumulation there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days. 17 days we haven't done the gap fill. But what also haven't we done? Pushed higher. Still, we're not going anywhere. So that is a very fast 2-day move. That is hard. So it's much easier for it to collapse out of bed and come down to there than it is for it to drive higher. They could do that very easily. I'd say in 2 days, it's probably more than 2 days. I mean, it's probably 3 or 4 day move down to there. 600 pips. It's 131, 132 ADR. That's 5 ADR basically. It's got moved to the downside. But look at this move here. We're looking for 5 ADR. We're looking for 600 pips. That was a week. That was 1,020. That was 1,024 pips. It did 600 pips literally in 2 days. So from that point there, we gapped down, and then we basically went whoom. In a day. I mean, that in a day there, it did 600 pips in a day. 560 the next day. These moves are doable, and it does sit in accumulations for a long time before it decides to go somewhere. It needs a catalyst, and this is the problem at the moment. We've got bank problems. We've got all sorts of stuff going on, and no real reason for the market to run anywhere at the minute. This is why it's sideways. We're stuck. But we need some news of some kind, and ideally, I think what could possibly move this is if we get a 4% interest rate next week on the euro. I think that could possibly drive the euro quite hard, and if that happens, we'll probably see the DAX have a bit of a wobble. Anything that happens in Ukraine as well, don't forget, that will tank the DAX. So we had no escalation for probably 6 months now with Ukraine. So any kind of escalation in the Ukraine crisis, any other countries have to get involved, which involves NATO, it's going to tank everything. So I don't know. But also you could have a stock sector miss. So earnings wise, if you look at the earnings, the DAX there. So sector weightings, consumer discretionary, industrials, materials. See, the DAX is made up of really stable stuff that really just doesn't get affected by much. IT is 13%, and healthcare. So a healthcare crisis or something will tank the healthcare sector. If that tanks, 10% of the DAX is going to drop. Stuff like that. So when you look at the sectors in there, there are some big sectors that could be hit. Export. So mineral exports, for example, if all of a sudden, let's say Australia and New Zealand decide they're not going to export anything over to Europe anymore, and they are going to put all of their export into China market, which is a large portion of it at the moment already, the minerals companies will probably have a massive pump in the DAX because there will be more demand for them than what we've had previously for Australia. So that will drive that up. If the opposite happens and Australia said we're not going to export to China anymore, we'd like to export more to Europe, that will probably take the weight off of this if they can beat prices. So, there's so much that moves this. It's got 40 different stocks in it in about 10 different sectors, all driven a lot of the time by the other markets in the NASDAQ, the S&P, and the Dow Jones in the US. So, we saw that last week, didn't we? When we had Tesla. So that was Tesla's earnings. Boom. That came down because the entire motor sector got 10% wiped off its stock, or whatever the percentage was. Yeah, but that was caused by Tesla having bad earnings. So they went, okay, Tesla having bad earnings, probably going to have bad earnings on BMW, Mercedes, so let's jump out of the motor stocks. And we had 2 days of tanking. Anything like that can happen. David, I run a strategy where I look at the 1 hour wide range bars, and then price gets to those levels. If I get a 5-minute break, I take those trades with a stop loss of 1/4 of an ADR from the highest or lowest line of the wide range bar. Yeah, so I've built an EA to test that. I think it's in. Is it in here? Is it in here? I have to remember what that is. Let's just hit the start button. I don't even know what it's doing. Let's have a look. Yeah, I've built a strategy that does a very similar thing to that. Oh, this was the one I built for the S&P. Oh, there you go. Okay. So what this is doing, you can't actually see it because it's not drawing them in. It's not going to draw them in on there either. But basically, you've got propulsion gaps here. So what this does is it places limit orders. So when you get a propulsion gap, it places limit orders at the high of the gap and the low of the gap. So the idea being, if we push away from that gap and we come back and retest it, it gets in short at the low of the gap. If it pushes up higher and completes the gap, it gets in again short at the high of the gap. Obviously, your average is then in the middle of the gap. And as long as we get a pullback from that gap fill, that's where you take your profit. So that's basically what this EA is doing. I don't think I've got any TPs set on this. By the looks of things, I haven't. So yeah, I've tested that sort of strategy, but rather than using a reversal within the gap itself on the hourly, I've basically just used the gap as the entry. So enter when we enter the gap, that would be your exit. If we go and close the gap, enter again, an exit, and have a stop loss a distance away from the gap. So it's using the theory that we obviously get the gap fills like this one here. So there you go. So that would have been an entry there, out. This would have been a double entry. That one would have been an entry on the entry, an entry on the exit. The stop loss would have been somewhere, and then it would have been exited there. So this one here, you'd have had an entry there and an entry there, short, pushed up, entered there, exit. This one here, you'd have had an entry there and a there. So it would have pushed down into that one entry, two entry, exit. That one there, you'd have entered there, pushed off, exited, entered again, pushed off, exited, gone into that one, entered there and there, pushed off, exit. This one, you would have entered there and there, probably stopped out. Really simple strategy. You don't need to overcomplicate it with wait till we get inside of there, then something happens. We know propulsion gaps get often tested and rebounded from, because these are areas of propulsion where the banks have entered orders. When we get back to them, the banks re-enter a lot of the time. And that's what that is. It's a completion of orders. It's either banks caught offside, depending how old they are. It's either banks caught offside, completing their orders, and then off we go, we've done our business, or it's banks that have moved the market and it's retesting recently and they're adding to positions to drive the price away again. So we quite often get these bounces, don't we? We also run them over, like we did there. So that one you'd have exited on, you'd have entered again there, and there you'd have got run over. But depending on where your stop loss was, again, there are so many variables and so many ways to trade it. I've got lots of propulsion gap target EAs. I've got three, say lots. I've got three different ones, and they all do different things in different ways, and they all work a bit. But all the ones I use with a stop loss are frustrating as hell, because trying to figure out the best type of propulsion gap to use is very difficult, because they come in lots of different shapes and sizes. Do you want one that's definitely got an accumulation before it? If so, how long should the accumulation be? How wide should that accumulation be before the gap comes in? Should that be bigger than the accumulation or not? There's a million different things to test, which is kind of why I'm going to manually trade it, because I just want to concentrate and focus on them for a bit. I'll get there. What's your experience with trading only 5-minute ADR? 5-minute ADRs depends how you trade them. So New Zealand dollar Swiss at the moment is an ADR hit today. So if you drop down to M5, wait for a reversal alert on that one, you're going to get in there. Depends what you're targeting. If you're targeting a third of an ADR, the strike rate is very, very high. However, you have to be careful how you scale into them. So if you get in off of that ADR there, you want to make sure that you're not scaling in too tight, because an ADR hit can also be the start of an accumulation break. Yeah, don't forget 20% of the time the market breaks out, 20 to 30% of the time the market breaks out of a range. 70 to 80% of the time the market stays range bound, mean reverse, which is why we're mean reversion traders, because 80% of the time the market is in that state. But if you get into an ADR reversal when the market is doing a breakout into a trend, you will be in that for a while. So you've got to be careful with them. Which is why my ADR set file has a very small target. It's a scalp. But this, that's my experience with it. My experience with every single type of trading, every single strategy, regardless, is it's hit and miss. There is nothing that is solid in this industry. If there was something solid that worked all the time, I'd be doing it. There isn't. I've tried it all. I've done this for 15 years. There isn't anything solid that works consistently. So you're always going to get run over at times. You just got to manage your risk and take the hits when you need to take the hits. What's a good place to start learning fundamentals? I don't know. Google, YouTube. If you really want to learn fundamentals, yeah, Google or YouTube. There's a really good course. It's very expensive, by Anton Creel. He is a very well-respected trader and educator. He runs a fund. He's ex-banking, and he teaches a scorecarding system. It's incredibly complex if you want to go into it. Depends how much you want to learn and whether you want to pay for a course or you want to try and bag it, get it together for free. Start on my website. Yeah. There's a bit of information about fundamentals. There's a bit of information about the key fundamentals. Courses. It's all about, if you want to learn anything, courses. But the problem you'll find with fundamentals is unless you have an economics degree, you will get lost at some point. Fundamentals are incredibly complex. The scorecarding systems that the banks use have around about 50 indicators for fundamentals, and they all have different weightings on their scorecard. So this bias scorecard that you see here is has got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 signals which make a bias. Proper fundamental analysis will have 50 plus. Yeah, Anton is very expensive. You're going to be paying $3 or $5 grand or something. I don't know. It's not cheap, Anton's course, but it is incredibly good. But the way that he teaches to scorecard is time consuming as well. Do I still do spin classes? Look at me. I'm wearing my spin gear. Where I've been this morning, yeah. I do spin classes every day. I'm a spin instructor as well. I'm a qualified spin instructor. I'll have you know. Not that I do spin. I don't teach, but I am qualified. One of those things I learned that I never used. Yeah, you'll find it very easy to get run over trying to learn fundamentals, which is why I built this. The main focus, right? The cot here, this column here, cot, and what you see here, commitment to traders. Yeah. So this basically is the overall futures market positioning of the speculative traders. So the non-commercial traders, the guys that are looking to make money. So these are your investment funds, not your hedge funds, not your banks. They're your speculators. These are the funds, the guys that have said, you know, give us 100 grand and I'll return you 120 this year. Those types of guys, right? This is their positioning. So these guys have a floor of analysts analyzing key fundamentals with economics degrees. They then tell the traders which way to trade, what commodities to trade, what they should be doing, right? So if everybody at the moment in the market that is an analyst or is paid 60 to 100 grand a year to be an analyst within a fund has told the fund to go short and 66% of the funds are short, what do you think you should be doing? Do you think you really need to learn economics and fundamentals when you have a chart here that tells you which way everybody's going? This is why I pay attention to COT, because the futures market has to be reported. Every single trade and every single transaction by the speculators is recorded at the CME, the Chicago Mercantile Exchange, or the CFTC, the Commodities and Futures Trading Commission. So I can see where all their analysts have told their traders to go. So why should I spend time doing analysis when I can just follow the guys that are doing it? This is delayed data by a week or two, but this is your long-term 1 to 3 month overview of the market. So this is what the market is expecting to happen over the next few months. They are short the Australian dollar at the moment. Yeah. So for the last month, it's been coming down. They're short it. Certainly not going up, is it? But you don't really need to do it. Morning, Amar. Virginia, regarding motor industry on the DAX, last week I thought it was due to Tesla dropping prices, which could be bad for the German car industry. Yeah, that's exactly it. Yeah, that's what I said. Yeah, so when we look at the DAX last week, that drop was Tesla. So that was caused by Tesla's figures. And they basically jumped out of all the motor sector, and a lot of the motor sector is in the DAX. Well, not a lot of it, but some of it. Look. Doesn't break it down, does it, actually? I guess that's in industrials. Manufacturing, isn't it? Doesn't break it down into the actual sectors, does it? Okay, so well, that doesn't break it down either. Doesn't break it down into individual sectors, unfortunately. I was going to ask if you talked about trading while you're teaching your spin class. No, I don't want to send them to sleep. You meant to G them up, not send them to sleep. Okay, class, ready? Okay, so let's do our warm up. So today we're expecting the DAX to either go up or down by anything up to 100% of its average daily range. Spin faster. That won't go down very well, will it? It looks like Fiddlecrest, Thames and profit targets have changed. Yep, quite right, Christy. They have. We've discussed this morning already. So Fiddlecrest basically have done us all a favour by upping their max days to 60. But in doing so, they've decided actually, instead of 5% phase one target, we are now going to make you do 10%. Thanks, Fiddlecrest. The only reason I used you, the only advantage I had with you was your target was half of everybody else's. Now you've got rid of that for something that I don't want or need. So I won't be using Fiddlecrest anymore because there's no advantage. They are cheap. I mean, they are cheap, but and you can't use EAs with them either. Also, the other thing that they've changed is their leverage. They've put their leverage up to 200 to 1. Don't need more than 100 to 1. So they've shot themselves in the foot, I think. Well, they haven't shot themselves in the foot. They've just changed it. But that was their main selling point, Fiddlecrest, was the 5% profit target on accounts under 250k. They've got rid of it. So unless that's a cock-up and they shouldn't have, but that's certainly what it says at the moment. So the pro trader accounts were always 10%, but the smaller ones, the micros, that used to be 5%. Now it's 10% and 5%. So it's still the same. Second phase is still 5%, but phase one, they've doubled it. So they've given you an extra 5k or 10k there. They've doubled the amount of days you've got, and they've doubled your target. It's not really selling it, is it? That's making it worse than everybody else. They are now way worse than my Forex funds. Not really the business decision I would have made if I was running them, but I'm not. What does the court report say about yen? Short. 82% short. But if you look at the yens, so your COT bias is basically a long-term view, right? The thing you don't know is with COT bias, the thing you don't know is the timings of all of those positions. So although 80% of the market is currently shorting the yen, i.e. the yen is meant to be weak, which means we should be longing everything against the yen, you don't know how long the holds are on it. And the yen is a safe haven. So what you find with the yen is a lot of money moves in and out and in and out and in and out fast. Same with the Swiss franc. So the positioning on the yen isn't necessarily indicative of a long-term hold. It can often be that they drive money into it. It doesn't change very much. If you look at the historical COT data on the yen, this page takes a while because there's a lot of data on here. So if you look at the yen pairs, GBP, Swiss, odd, New Zealand, yen. Yeah. So that's the pound yen down there. Actually, this isn't a very good representation because it's obviously done on crosses, but the vast majority of them you will find sit kind of in that mid-range. Yeah, you got a couple of outliers with the pound because the pound's been a bit off. The US dollar is always going to be off against the yen, and the Swiss franc, because the Swiss franc is another safe haven. But the vast majority will all sit within that range most of the time because money flows in and out of the yen. Therefore, it drives up and down against the other currencies when money flows in and out. So a lot of them do, actually, to be honest. But there's always a little bit more of a bias on most of the other pairs. Tim, I use Peloton. Was worried it might become an expensive clothes horse, but actually it's really useful to do whilst in front of the charts. Yeah, I used to have a spin. I used to have a quite an expensive spin bike here, a Stages bike, which is what we use at the gym. Got rid of it after lockdown. I bought it for lockdown. I spent 1,600 quid on a spin bike for lockdown. Then how long I was going to not be able to go to the gym for, and I didn't want to turn into a potato. Really nice worldwide tours you can do, yeah. Come on, Peloton, push harder. Have you seen the have you seen this? Let me turn the sound on.
Lee in Manchester, you're amazing. Chris in Southampton, you're stronger than you think, buddy. Andy in Falkirk, your bollocks have slipped out the side of your shorts, mate. Tom, let's do this.
Sorry, it makes me laugh all the time. Peloton advert. I'll put it up there. That is just typical of Peloton. Talking to people. How's your arm been? Fine. Arm is better. Fixed. The drugs worked. I really liked being on those drugs. They made me very, very, very happy. But I'm not on them anymore. Anyway. Right. I'm going to leave it there today. So Swiss franc, basically, we've got a bit of a weakness on that at the moment, which is nice. We'll see if we can get a continuation push on it. We've only had the one ADR so far on that New Zealand dollar Swiss. Everything else is a little bit undewy at the moment. So it's all starting to come back in the right direction. So all these big moves that we've had, it looks like the profit takes are starting to kick in. We need to get confirmation though. So for example, there on the CAD Swiss, we didn't get the reverse alert on the 4 hour. Hourly we did. And it is holding at the moment, but it's not convincing, is it, at the minute? So I would really love to see some ADR hits on these today and get some of these moves undone. But we'll wait and see what happens. Quite possible the market is going to sit around and wait until 1:30 until we get the GDP news and the unemployment claims for the US. So as soon as that news is out, it's going to clear the decks, ready to obviously undo and make some moves if they want to. However, we've got the yen tomorrow as well. So that monetary policy statement quite often comes out somewhere around about 3:30, 4:30 in the morning, UK time. So we'll have that by the time we come into the live room tomorrow morning. And then obviously we've got GDP for the Canadian dollar in the afternoon as well. So this really is the main news this week for the US dollar. We've got PCE tomorrow, which will move it as well. But the figures here will probably drive the US dollar for the next couple of days. So if we get a bullish result, there's a good chance that we will get some strength on the CAD, for example. But we need to keep our fingers crossed that we don't get any more negative news on banking. If we do, there's a good chance that Swiss franc will power up again and that yen will power up. So what's that? 5-year credit default swaps rise to 67 from 66 at Wednesday's close. That's, no other news this morning apart from the oil news. So, what is PCE data? Go to Forex Factory. If you want to know about anything to do with fundamentals, if you go to Forex Factory and basically click on any news event. So it tells you. So PCE here, core PCE index. If you click that little folder, opens up what it is. So change in the price of goods and services purchased by consumers, excluding food and energy. So it's basically a trimmed down version of CPI, which is the Consumer Price Index. So it says there, look, there you go. Differs from core CPI in that it only measures goods and services. So it is an inflationary figure. So again, if that is bullish, if we get CPI being high and PCE being high, that puts pressure on the Fed to increase interest rates. Pressure to increase interest rates means you earn more money for US dollar. Therefore, the US dollar tends to rise. CPI and inflation starts to come down. It removes the inflationary pressure, which removes the need to increase interest rates, which means that they can reduce interest rates, which makes the currency less likely to be invested in, which reduces the US dollar. So it's to do with the strength of currency. But PCE, again, like I was saying earlier with scorecarding, when the banks and institutions and economists are scorecarding, they use PCE, they use CPI, they use PCE, they use every single measurement under the sun, and every single one of these is given a score. So depending on whether it comes out as a plus or a minus, it will get a score. The differential from the previous to the current will give it another score. And then they compare that score against the PCE for another currency, like yen, and that gives you your PCE advantage over US dollar yen. And that's basically how fundamental scorecarding works within banks and institutions. But they measure everything. I only measure the core 4 fundamentals, the key drivers for interest, for currency movement. But those 4 drivers that I measure are made up and move and change because of these as well. So core PCE will all feed in to consumer price indexing. You tend to find they all follow. So you don't need to track all of them. If you want to track all of them, which is what Anton Creel teaches, you will have a spreadsheet with 30 odd, 40, 50 columns across. And a much more complex market overview. But if you want to know anything about anything to do with fundamentals, this tells you what they all are. Utilize ChatGPT, right? I'll give you a little hint right here, which is something very useful if you want to know anything. So if you go to ChatGPT and type in, how does whatever it is affect currency markets? Yeah. This will tell you, right? So this is something you can utilize ChatGPT, OpenAI for basically teaching yourself fundamentals. You don't need to do a course. It will tell you what they do. You know, this is doing it to the nth degree, isn't it? Overall, the core CPE price index can have a significant impact on currency markets as it provides insights into the inflationary pressures in the economy, which can influence monetary policy decisions, i.e. interest rates, and affects the demand for a currency. This is exactly what I just said. Yeah. So this is utilize ChatGPT to teach you. Very, very, very useful for that sort of stuff. Yeah. So GDP, things like that, core durable goods orders. So, you know, you do the same thing. You want to learn about core durable goods? Key economic indicator that measures the changes in the value of new orders placed with manufacturers for durable goods. Blah, 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 blah. There you go. Basically like a course. I kind of keep thinking maybe I should put this on my website and build a section on the website, basically just copy and paste that up there so that it's informational. So if anybody wants to do that and send me a Word document or a text file, feel free. I'll post it on the website, and then it's there for everybody to have, isn't it? A little fundamental course. Right, I'll leave it there. It's 10 o'clock. Been on for 2 hours and 17 minutes. I'm trying to keep these short because I want to do some systems development, but I keep waffling. So I'll be back this afternoon. If you need anything, I'll be in the Telegram group. Be working on the MT5 version of the indicator and other bits and pieces today. And if you need anything, I'll be back in the Telegram group. Back tomorrow morning at 7:50, same time, and back at 2:20 this afternoon for the New York session. We'll see how we get on with the US indices. ADR hit on the DAX. Just about hitting now. ADR on the DAX. Look. Unfortunately, I got stopped out on that, but never mind. Break even, so not too bad. All right, have a good day. Anything you need, let me know. Otherwise, I will see you guys later. Have a good one.